Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek. Seeing some mixed trading grain and livestock futures this morning. We've got corn and wheat kind of setting back with soybeans to the plus side over in the grain trade. Hogs seeing a little correction today, but cattle back to the plus side. And Scott, let's talk about cattle. Obviously a down day yesterday, but it looks like the funds are defending their long here today.
That's right. Thanks for having me. And it does feel like that healthy correction term to me does fit this bill. We had a little bit of an overbought market. It's an overbought as they've been in the last 3 months as far as the run that they had. It was led by the funds, not so much by the cash. That was kind of the lagging factor. But every time we get a little break in this market, there is a group that's trying to buy this market, trying to buy those breaks. And that's what we keep finding. It just surprises you when the news feels a little sluggish. And maybe this is a time we need to start to be a little bit worried about it. The funds come in. Here we go. We're off to the races again and challenging contract highs and running up triple digit gains again today on not a lot of fundamental news backing it. So yeah, we'll take it, but it's just that long-term bull market that we feel like we're in. It still has a lot of time that it could be higher because we're going to be on these tight supply numbers for an extended period of time. It takes a while to get that heifer kept and get her bred and have a calf and then have that calf all the way to the market. That's a couple of year turnaround. So it's not something that can end quickly and suddenly it's over, but still need to respect the prices that we're at because we do have a lot of risk at these levels as high as we are. Some of these deferred markets are starting to get closer to that $2 mark, which very impressive. Great spot to maybe be looking at doing something to kind of protect yourself there.
Absolutely. And you mentioned the lack of, big news to drive the market, including cash trade. Now we've had 4 weeks now of the weighted average actually being a little bit lower on prices, but last week, not a lot of negotiated totals. This week, it's a pretty quiet market. Again, we've not had a lot of cash, have we?
That's correct. The cash is a little bit slow, a little draggy, I'll call it. Still, we're looking at, a few 184 trades that have happened here in the north, and that's still a great price. It's hard to be passing some of those prices, as high as we are, but it's been tougher to get it. I don't see everybody getting the 184 bids and all of the packers running around. We had regionals out in front a month ago buying a lot of 188 trades that were happening. But the unfortunate part, hearing that some of those cattle are still in the yards, waiting to be picked up, still in the system. So takes some of those regionals out of the market, and you're left with just some of the majors left, grabbing some cattle at a little bit of a lower price and not raising their bids very fast. So that's been, it's been a tougher sledding, I guess, with trying to get some cash bids, and you're getting some quicker sales. The waiting till Friday hasn't paid off like it has. So you're seeing some sales earlier in the week because, hey, I'd like this price. I'd like to get some. And it's hard to blame them. At the price that we're at. So futures are actually leading better than what the cash is. So, I mean, it's you'd think that those lower bids would pull the futures down, but futures have not given up yet. And the funds are still thinking higher. And seasonally, this is a time of year where it gets tough. The north can slip down towards some more southern cash prices because we have more cattle available. And we have excellent feeding weather right now. So it's easy to say, hey, these cattle are gaining 5 pounds a day kind of stuff, making up for some of that heat that we're in. So, hey, I'll just shut the gate, keep feeding these. These feeder calves in the sale barn are red hot again and staying at high prices. So I'll just keep feeding what I have. That can create a problem later, but for now, that's kind of the easy thing to do for a lot of guys is to keep the gate shut. But I guess it's to each his own there.
Yeah, and you talk about the heat and the weights, and they really didn't come down like everybody expected. What happened there?
I think we were expecting a big break in the weights on last week's report from the 2-week-old data, because you heard a lot of stories on the gate cut cattle that went out before the heat and after the heat, and there was 40, 50, 60-pound differences, and some even greater. So you heard a lot of stories about it, but I have not seen it show up yet, which is very surprising. It caught me a little bit off guard. We'll see what the numbers say today, but we're holding on better than I expected on the carcass weights, which it's a little bit of a damper. So that's one of those fundamental stories that's not really helping us. And on this rally here, that means we are being led by the funds here, because the cash dragging down a little bit, the carcass weight's not doing what we thought with a large decrease. So we'll see which one wins out, is what it kind of feels like here.
Yeah. You talk about 184 still being a good cash price. Let's talk about profit margins. What do closeouts look like right now?
Closeouts are looking great. We've got some feed costs getting a little bit cheaper, cost of gains getting a little bit more in line. But when you're looking at a $400, $500 head winner, you're kind of, maybe I don't need to hold out quite as hard as I think. So I'm hoping that's the incentive that's going to keep us a little bit on the current side and keep us moving some of these cattle, because, yeah, we've got high interest rates. We've got a lot of risk on the table, a lot of dollars tied up, visiting with bankers, and some of these notes are being missed by a long ways. How many times do you need to extend your note because you have a large line of credit with what you have? So capitalizing on that, all-time high prices, not a bad idea to take some of that. Yeah.
And let's talk about the hogs, kind of a two-tiered market. You and I have talked about that, bigger upfront supplies. So you see the board, we've got discounts in the back months as well, but by the time we get there, we should have a little bit less numbers. So what do you see moving forward here?
Yeah, upfront into the fourth quarter, I think our supply is going to be pretty good size. So has that negative feel in the front, and we're quite discount to where some of these summer months went off, certainly where the August went off. And in my opinion, August needs to kind of hold in that mid 80s number, maybe even low 80s. And that would be accurate to what I think it can do. But the triple digits up and down, that's just the way that the hogs operate. I think there's some strong support at $80 on the October hogs. It always kind of magnets down to that level, but it's able to kind of hold it, get back above it, get back to the mid 80s. So I think it's in a good spot. I still look at the D's contract. I'm a little bit worried that it's going to be able to hold some of these levels. So I'm a little bit of a hedger, I guess, on the supply side, and coming into this fourth quarter and maybe the start of the first quarter. But I think the sow liquidation that we've seen this last year is why we're at 96 in some of those next summer months. So I think there's some optimism there that, hey, these numbers are going to get better, and it is a futures market. So maybe this fourth quarter large supply that I see, maybe doesn't hit us so bad, because we know that there's, possibly tighter numbers coming ahead.
And the grains quietly mixed here this morning. We're past the WASD now, so we've digested that news, and we went down, tested some major long-term support areas that kind of held here. So now it's all about harvest data, combine data, or what?
That's a lot of it. Harvest is here. Don't blink. You're going to miss it, because it's going to go fast, is what it feels like. The dry weather that we've had, the warm days that we've had, the silage cutters, it started to dry up pretty fast. It was a smaller window that they had to run hard. So they might be dragging a little bit. So stay safe. I know you guys are working hard out there, but yields so far, I'd call corn, in my area, it's better than expected. And I think that's, you can always find what you're looking for in those kind of yield data. So you almost lean to what you normally are. I'm usually, I think farmers do a good job. Yields are better than expected. That's just how I fall. You kind of are the guy that you are. So hearing some excellent corn yields. Only had a few dabbling into some beans yet, and better than expected there as well. Very surprised that the bean yields could be that much. There's a lot yet to be determined on what these bean yields are. That's the biggest risk, because the end of July and into August, we had extreme heat, dry weather. That's usually the premier spot for what is going to affect these soybeans on the yield for the weather time of year. And if they can make it through what they just went through, it's going to be very surprising in my mind. So the first ones I've seen, I'm very surprised already that the beans were able to do that and come through that resilience in proving that they can have that kind of yield. So I think we'll see quite a bit of harvest pressure coming yet. Sometimes you can hold these markets in the middle of September and start to turn around, but you've got high interest rates, you've got good crop insurance prices. So I think you're going to see some farmers selling just because of that. So it might take just a little bit longer to put in that harvest low, in my opinion.
Well, and you're up in the northwestern part of Iowa where you've had some better, I guess, conditions. You get in other parts of Iowa, we're not hearing as good yields, are we?
That's right. There is some areas. I mean, I am in the prime spot for this year. These yields are amazing, and that's why the land values are as high as they are right here. But waiting on a lot more news in that southwestern Iowa, Indiana, Illinois. What are we ending up with there? So that news is still pretty quiet yet. So maybe we'll increase the volatility because the corn's been wildly steady. Absolutely nothing here. And beans took out their downtrend line here the other day. So funds were a little bit of a buyer yesterday. Right. It looked like maybe defending some of their length. So maybe you'll see a little bit more volatility in these beans as we do hear some of these yields coming in. But corn looks to be pretty content staying right here.
Yeah, we've been in a pretty narrow range there for sure. All right. Thanks for joining us. Scott Varilek with Kooima Varilek. That's Markets Now.